All right, so first we'll talk about the weekly chart. Weekly chart. Tomorrow's a holiday. We had a high one buy, fairly tight bull channel. Odds are we're going to start going sideways in here. As far as getting a strong reversal down, I think it's unlikely for a while. You're probably going to be sideways for many, many bars and many, many weeks all through here. But bulls who bought scaling in lower, getting out break even, probably continued sideways trading on the weekly chart. Daily chart, more or less the same. We have a high one buy after a very tight bull channel. Bulls buying, scaling in lower, getting out on the bounce. And now we're probably going to be forming a triangle. But even if we do form a triangle and go sideways for many bars, what's the probability? Odds are we'll probably get some kind of second leg up. So I still think even if we go sideways for many bars, we'll probably break out to the upside. Ultimately, I think we'll find sellers above. I think we're going to be entering a trading range on the daily chart for a long time. A lot of trading range price action through here, basically 6-ish months. Probably be forming more trading range price action here. 5-minute chart. We had that big sell-off yesterday, and then we gapped up on the open. Bar 1, it's a strong enough bear bar. Let me do like this, too many bars. There we go. Bar 1, it's a strong enough bear bar closing on its low. Odds are you're going to get some kind of second leg down. Whenever I'm looking at the market, one of my preferences is to look at the Globex chart. So Globex chart through here, you have a big rally and a big sell-off. So on the open, bar 1 looks like this, and that increases the probability that we're going to have a lot of sideways. Strong enough bar will probably go lower, but if it's a trading range, it's probably buyers not far to the downside. By the time we get bar 1 and 2, bear breakout, follow through, increase the odds of a second leg. But after a big gap up, probably more of a trading range than a strong sell-off. Three consecutive bear bars, good for the bears, but I suspect the upside is limited. Downside's limited, but the first slope is probably going to be minor. And then 4, bull bar, it's a breakout to the upside. So bull breakout, pull back, buy set up, so a high one buy. Bulls are hopeful it leads to a strong second leg up. And the bears are hopeful that we have sellers above and a second leg down. Breakout, pullback, sell, bar 5, low one short, closing on its low. Good for the bears. Probably going to go at least a little bit lower. And then 6, we triggered the sell below bar 4, and we found buyers below. 6, it's a second entry buy, good for the bulls. And then 7, we have an entry bar, but it failed to close on its high above 7. We're right below the moving average, and that lowers the probability that the market is going to find buyers. 8, bull breakout bar closing on its high. We have a double bottom, 4 and 6, breaking out above the neckline. 5, that increases the odds that we're probably going to get some kind of measured move. And then 9, bear bar closing on its low. What about selling it? The bears can argue it's a second entry sell below 9, but I suspect realistically, as far as selling below 9, I think it's low probability. Probably more traders. As far as selling below 9, I don't think it's all that ideal. Realistically, there's probably more traders buying below 9. 3 bar micro channel, really not ideal. Probably buyers below. 10 outside up, that's good for the bulls. But you want to buy in the midpoint after this strong sell-off. 1, 2, 3 legs up. Outside bar, it's typically a trading range bar. That's really not what you want to be doing. Now, the one thing going for the bears is the one thing going for the bulls is the moving average. We're right around the 50% line for the moving average, and that lowers the probability that we're going to immediately race up. We got a doji on 11 consecutive bull bars, 10 and 11, good for the bulls, increase the odds of buyers below, scaling in lower. And then 12 and 13, we broke below 11 with 12. It's basically a wedge top, 1, 2, 3, but consecutive bull bars here, 3 consecutive bull bars here. Bear bar here, that increases the odds that we'll probably get a second leg down. And then 13, 14, bull reversal, follow through, good for the bulls. increase the odds we're going to get at least a small second leg up. 15, bear bar, low one short, probably buyers below. And then 16, we have a bull bar closing on its high. That's good for the bulls. What are the chances that the market is going to go a lot higher? Realistically, there's probably more traders selling in this general location. We have a prolonged bull channel, and we keep getting disappointment after every new high. And now we have a bull reversal and follow through, 13 and 14, pause 15, second leg up, 16. That increases the odds. That was probably sellers not far above, and we'll probably pull back. 17, we have an inside bar, not a great sell below, not a great buy above either after the consecutive buy climaxes. And then we got the small second leg up on 18. Good for the bulls. Probably going to go at least a little bit higher. 19, bear breakout below the 18 low, but not a great bear breakout below. Bad entry bar for the bears selling below 18, but not a great buy above 19, so probably sellers above. And then 20, we have an inside bar. It's a doji, low probability to sell above the bar. Low probability buy below, inside bar. We'll probably sellers above in a second leg down. And then 21, we went outside down. Good for the bears. Bear bar closing on its low. You will have bears selling it, taking a chance we break to the downside and break strongly below the moving average and break below the low of the day. Good entry bar 22, probably going lower. 23, doji, not ideal. Increase the odds of sellers above in a second leg down. And then 24, outside down, probably going to go at least a little bit lower. And then 25, we have a bull bar. The bulls, it's a bull bar, but a doji lowers the probability that there will be not a great buy above, increase the risk of sellers above in a second leg down. Then 25, we tried to break to the downside, but a climactic bar with a tail below the bar. Really not what you want to see. And that increases the risk that there's more buyers down here rather than sellers. 27, low one short, probably buyers below. And 28, bull bar closing on its high for the bears. I think you have to get out of shorts above 28. Even though the channel down's tight, it's really not what you want to see, and it's possible double bottom after the gap up. Strong entry bar, 29, good for the bulls. Probably going to go at least a little bit higher, 30. Now we have 3 consecutive bull bars, 28, 29, 30, probably buyers below. 31, we have a bear bar, but what do you do with that bar? I think realistically, as far as doing much of anything after 30, I suspect there's probably buyers below, and we'll probably get some kind of second leg up. 32, we have a high one buy, probably sellers above, but after this rally here, ultimately, I think we'll get a second leg up. So really not a great sell above the bar. 33, inside bar. Triangle after the breakout above 29, probably going to get at least a second leg up. And then we got another doji on 34. 34, inside bar, probably going to go at least a little bit higher. And then 35, triangle. We have a bull break out of the triangle, and now we're pulling back on 36. What about selling? I would not. It's a breakout of a triangle, and the odds are we're going to get some kind of second leg based on this rally. So probably more traders buying down here rather than selling. 36, bull bar closing on its high. Good for the bulls. Another inside bar. There might be sellers above, but there's probably buyers not far below it. 37, doji, still probably going to go at least a little bit higher. Then we got the upside breakout on 38. 38, bull bar. It's a wedge top with 31, 35, and then 38. Good for the bulls. But wedge top is good for the bears, but a wedge top with a lot of gaps, and bears can't make money below bars, and it's a micro channel from 32 to 38, lowers the probability of selling. Bear bar 39, we may pull back and test the bottom third of 38 and the moving average. High one by 40, but probably sellers above. And then we got the bear breakout on 41. Good for the bears, but really not a great reversal. 39 and 40 are small, and then 41's a big bar. That increases the risk that it's a sell vacuum test of support, the 38 low and the moving average. Then we got the bull reversal bar on 42. 42, it's a reversal up right at the moving average, although it's a 4-bar bear micro channel and in the middle of a trading range, so it's possible that bulls get trapped. It's possible bulls get trapped buying above it and we get a second leg down. The bulls ended up getting a strong entry bar. That's a strong enough bar. Odds are we're going to go a little bit higher. And then 44, we have 3 consecutive bull bars, probably buyers below in a second leg. 45, another bull bar. One of the problems for the bulls is now we're at the open of the day and it's a more credible wedge. This is possible variation of a second leg trap. Rally, pull back, second leg up. 49, another bull bar, closing on its high. Now we have 5 consecutive bull bars. I still think probably sellers above, and we're going to pull back fairly soon. And then 6, we got the bear bar closing on its low. That's a strong bar for the bears, and that's a warning that we're in an overall trading range. And because of that, we could easily test back to the middle of the range. 48, high 1, probably sellers above, and sellers above the 46 high. And we broke to the upside above 48 on 49, testing the close of 46 and found sellers. 50, reversal down, closing on its low, probably going to go at least a little bit lower. Bulls are hopeful that we get a second entry buy, 51, but with 47 closing on its low, and now 50 closing on its low, that lowers the probability for the bulls. And then 51, doji, not a great buy above, probably sellers. 52, another bear bar. 53, another doji. Looks like we're going to try and break below the moving average. In 54, we have a close below the moving average. 55, follow through. A little bit of a parabolic wedge. 48, 52, 55. But I suspect 54 and 55 are strong enough for at least a small second leg down. Pause. 56, not great follow through for the bears, probably limits the downside. We have magnets below. 42 low. 57, low 1 short. But probably going to get at least a small second leg down after the bear breakout on bar 55. And then low 1 short, below 57, buyers below, but not a great buy above 58, so probably sellers. And then we got the second leg down on 60, 61, 62. Bars getting small, and then we got the bull reversal bar 63. For the bulls, it's a parabolic wedge, 1, 2, 3. But on the 15-minute chart, if you're buying 63, you're buying this doji right here, and that lowers the probability for the bulls. 64 consecutive bull bars, 63, 64, good for the bulls. May go a little bit higher. Then we got 65, and 65 is disappointing for those bulls. It's possible 63 and 64 is a bull trap, trapping bulls into buying high in this tight trading range after this tight bear channel. So it's possible 65 is a double top with 57 or 59. And we break below the neckline 63 and fall for a measured move. 66, good for the bears. Probably going to get at least a small second leg down. And it's possible this is leg 1, pullback, leg 2. The bears will be thinking about the potential of getting some sort of second leg down here, possibly test of this buy signal bar from over here. 3 consecutive bear bars, 65, 66, 67, strong enough, will probably go a little bit lower. 68, pause, good for the bears, make it a second leg down. And then 69, bear breakout, testing the 28 high, the buy signal bar. We may go a little bit lower, but this looks like a bear leg in a trading range. We have 3 consecutive bear bars, pause, second leg down, 69, prolonged micro channel. We had buying pressure up here, and the traders who bought above 63 or bought above 64 got trapped, and they may buy above a bull bar on 70. 70 is a strong enough bull bar that if you did buy, if you're short, you've got to get out of shorts above 70. Too much risk. We get a couple of legs up and test the 63 high at a minimum. 71, low 1 short, buyers below. And then 72, doji. We have a small second leg up after 70. We rallied on 70, pulled back on 71, small second leg up 72. But I suspect buyers below 72. And we'll still probably get back to the magnet of the stop order buy for the 63. 73, we broke to the downside below 72 and reversed up 74. It's a strong enough outside up bar. We're probably going to test up to the 73 high and probably the 74 close as well. And we got to both of those testing the top of the second leg. We had a sell off, pause, second leg down. So it was a second leg trap for the bears. We got a strong reversal. This reversal up strong enough to make me think we'll probably get up to a new high of the day. 75, Follow through for the bulls. Good for the bulls. Probably buyers below 76, and then we went outside up 77, testing the open of the day. And at this point, I think it's worth getting out. And then we got really close to the high of the day with bar 1 on 78, and then reversed down sharply. And you can see what happened. We rallied on the final 3 bars of the day. For stop orders, you can sell below 1, you can sell below 2. Selling below 2 is a little bit dangerous. It's a lot of risk, and because of the gap up, we may go more sideways. Bears, if they sell below 2, they probably get out above 4, but if they get out above 4, they got to sell again below 5. And then it gets a little tricky here. If you sell below 5, do you get out above 6? Probably. I think a lot of traders selling here are probably willing to sell more above the 5 high. And then as far as what you do through here, bulls can buy above 6, betting on a double bottom. 4 and 6, not a great buy signal bar though. And if they do, I think it's tough to stay long below 9, but it's reasonable. And then, maybe they get out of shorts below 12. Bulls, I think they have to buy above 13. I think bulls buy above 13. Bears have to get out of shorts above 13. And if they do, where do they sell again? Bulls probably get out below any bar at this point, certainly below 21. Bears can sell 21. And if they sell below 21, they definitely get out of shorts above 28. Bulls buy above 28. Bulls, if they're buying above 28, they don't have to get out below 31 or any of these bars, but I think they do get out below 39. And if they get out but below 39, they probably buy again above 42 or above 43. Bears, they get out of shorts above 42, definitely on 43. Bulls, if they buy 43, I think they have to get out of shorts below 47, and 47 is a reasonable sell, betting on the high for technically that's the high of the day, but betting on a lower high. Bears, if they're short, where do they get out? I think they probably get out below 63. And then bulls, if they're long, I think it's a difficult buy at best. And then if you get 66, 67, I think you have to get out of longs. Bears can probably sell again. And then bears, if they're short, they get out above 70. Bulls can buy 70. And then where do they get out? They probably just get out somewhere up here. I would not hold until 78. Trading range day, you're at resistance, open of the day, high of bar 1. And there's not a lot of time left in the day. And whenever the market's late in an overall trading range, you can often get sudden reversals that happen really quick. And you can see fairly big bear bar closing on its low. Limit orders, sellers above 3, but buyers below bar 4, even though it never triggered. I thought probably sellers above the 5 high, scaling and higher. Buyers probably below 9, sellers above. Buyers probably back to the 9 low during bar 13. I thought sellers above 17, sellers above 20. I thought buyers below 25, scaling and lower. Buyers below 27 for a second leg up. Buyers below 31 for a second leg up. I thought sellers above 48 for a second leg down. I thought sellers above 52 for a second leg down. And that's pretty much it. I think it's really tough to trade with limit orders through here. Buyers below 71, 72, if that made sense. Buy the close, sell the close. I thought probably really not great. Any great buy the close. Maybe buy the close 29 or 30, but better to buy the pullback to the moving average. And maybe sell the close 77, but even that, it's not all that easy. And then, maybe buy the close 73, but not ideal. Pretty tough overall. Okay, question. If using a simple point of view regarding 56 through 58, so here, 56, 57, 58, I thought it could be 2 things. One, this is the question. I thought that it was a 3-bar micro channel for a possible second leg up. So they thought it was a 3-bar micro channel, probably buyers below a second leg up. Makes sense. Although context is difficult coming from a prior huge bear bar. Yes. The pause bar on 57 could be an implied second leg up and could be a second leg trap for the bulls where the FOMC could get a second leg down. Yeah. I mean, yeah. So basically 56 was a bull bar closing on its high. 57 is a pause and 58 was a small second leg up. And that's what led to the reversal down on 59. But it's a 3-bar micro channel, and that increased the odds of buyers below and a second leg up. I agree. Often the question, do you think it's too volatile and unpredictable at this point after bar 72? So Can you trade past bar 72? Well, there's an increased, you have lower probability behavior and increase in volatility, which is basically the same thing. And because of that, there's greater risk of volatility. But overall, you can certainly trade it. I think just in general, most traders should not. Brad, do you do anything else to stay focused? Do you do anything during your trade to stay focused? Not really. I mean, I probably do the same thing everyone else does. As far as advice, I mean, you're asking for advice as far as staying focused, watching your trade. I think it just takes time. The more you look at something, the more your ability to stay focused becomes. But my mind definitely wanders at times, and sometimes I have to take breaks for sure. And just the more you do anything, the easier it gets. So where do we go on Monday? We have a high one buy, and on the daily chart, and it's a strong enough buy signal bar that I expect will probably get a second leg up. This makes me think we may end up testing back somewhere up here, but we'll see. Okay, thanks everybody, and I will talk to everybody sometime next week.